So I just want to first thank everyone here for attending this 25th anniversary conference of AMI. My name is Lucille Eckrich, and I'm a founding member of the Alliance for Just Money and a board member of it. And back, 17 years ago, a Quaker friend of mine who happened to know Stephen Walsh told me about this money conference in Chicago, and my friend knew I was interested in money. Having attended almost every conference every year since then, I can say that Stephen Zarlenga, whose photo I bear on my shelf, is, I think, smiling down or smiling from the cosmos or the energy out there on Stephen Walsh and Colbert, and frankly, all of us right now. And so just on behalf of AFJM, I want, and all of us who are here, I want to thank both Stephens, Zarlenga and Walsh, for their steadfast efforts for sovereign money reform, and all of our efforts who are here. It's my pleasure to introduce Mark Cassell, who teaches comparative public administration and policy courses at Kent State University, where he also directs the Washington Program in National Issues, which is an internship program through which AFJM had the really good fortune of having a stellar intern last spring, Ben Ringinger. And so I thank you, Mark, for your work in that program. And without taking any more of Mark's time, I just want to say we're really in for a treat in the next half hour. I just finished reading his stellar 2021 book, Banking on the State, which is really based on his knowledge of the subject matter, which is German public savings banks, starting from many summers that he spent with his grandparents in Germany, from many years of studying public policy, especially vis-a-vis banking in the US and Germany and elsewhere, and from his in-depth mixed methods research study that the book is based on. And while the book does not directly or explicitly, I think, have to do with sovereign money reform, reading it with a lens of monetary critique and reform yields me much hope and empirical evidence from this over 200, almost 250-year-old network of locally rooted public savings banks that are networked and across states, county states, and the national government, and how credit unions can, and I think will, function as intermediaries in a just money system. And so I thank you, Mark, for being here, and I would ask us all to give him our undivided attention now and save posting in the chat for the Q&A, which hopefully we'll have 5 or 10 minutes for at the end. Thank you,
Great.
Mark.
Thank you so much. Let me see if I can make this work here with the screen share. Just to share my screen. Is it working? I never know.
Yes.
Yes.
Okay. Okay, great. Well, that's such a generous introduction. Thank you so much. I really appreciate the opportunity to talk a little bit about Sparkassen, or public savings banks in Germany, to this illustrious group. As she said that my name is Mark Cassell, and I'm a professor at Kent State University, and I run among other things, I run a program in Washington, D.C. And as she mentioned, one of the treats last year was that one of our students at Kent State was able to intern with you guys, and it was really super helpful to him as well as to me. So yeah, I am interested in public savings banks. And I published a book on the topic called Banking on the State. And I thought I would just say a few things about what public savings banks are, and talk a little bit about the puzzle that was at the center of the book and some of the solutions. So that's kind of how I hope to kind of focus on today. Let's see if I can here we go. So some of you probably are already familiar with what public savings banks are and how they work. The United States has one. We have the Bank of North Dakota, which some of you may or may not be familiar with, but at least in Germany, public savings banks or Sparkassen are really, they're a group of savings banks that have been operating across Germany for at least 200 years. And their origins really are with the Industrial Revolution. They were in some ways born out of that period where you had a tremendous growth in the number of working class people and poor people, particularly in the cities. There was a need for an institution that could service their lending and borrowing needs, as well as a place where, frankly, they could put their money safely. There really wasn't a whole lot of other alternatives outside of things like pawn shops. Banks as such existed, but they were primarily for very wealthy people, for land owning people. And really the public savings banks in many ways were a product of really conservative policies of Bismarck and others, who really saw them as a way to get essentially poor and working people to buy into this new kind of capitalist system. And again, they were a place where initially poor people and working people could put their money safely, and later on they became places where they could borrow small amounts of money. But they were really born, as I say, out of the Industrial Revolution. They tend to be small. They're independent financial institutions. So in other words, each public savings bank operates independently of another public savings bank. Initially, these were institutions that were owned and insured by local governments, and they were really arms of local governments. That is no longer the case. They are no longer insured by any government, really. The European Union adopted rules that prohibited that. And as I said, they're no longer guaranteed by local governments, and they're certainly not owned by local governments, although local governments play a role in the governance of those institutions. And today there are about 376 public savings banks located throughout the country, with about 13,000 branches, and there are about 205,000 employees. One of the things that sets savings banks apart, public savings banks apart, is that first of all, they are for-profit institutions, but they're not profit maximizing institutions. So they operate as for-profit institutions, and managers in those institutions are quick to point that out. They include a very broad mission that includes a very public component, which is to promote savings and asset building in the community, to ensure financial services, to maintain a presence throughout the geography in which they're located, and to safeguard lending to regional enterprises. So just to give you a sense of what that means in practice, there were two sort of recent examples where that came up. One was, many of you might know that not too long ago, Germany experienced a kind of refugee crisis. The German government welcomed about 1 million refugees from Syria and from Afghanistan. And they all needed banking, and in part because the way in which many social services in Germany are provided, it's through the banking system. City governments or county governments, there's no cashier desk that they can turn to. Most social welfare transfers happen through the banking system. And so when the country took on this very, very large number of refugees, there was an incredible need for banking services, and most private banks were unwilling to give these new migrants bank accounts for a variety of reasons, right? That we could sort of go through, right? Not much of a credit history, not a clear address, records were questionable, and the primary institute that provided lending services to refugees was savings banks, in part because that was their public mission. And more recently, a good example where you really saw public savings banks play a significant role has been in the wake of COVID. In the COVID pandemic, a number of countries, obviously including the United States, adopted measures to provide assistance to small and mid-sized enterprises. The United States adopted the PPP program, which again made private banks the gatekeepers for federal support to small and mid-sized enterprises. Germany did something similar, but because Germany had public savings banks, what happened was that the public savings banks became significant advocates on behalf of small and mid-sized enterprises in their geography, because that's part of their mission. And so one of the things, I'm working on this now, but one of the things that sort of sets the US apart from Germany in the way in which public savings banks play a role is in the deployment of support to small, mid-sized enterprises. You see that there were many more smaller grants provided, and to businesses in very poor areas in Germany got assistance, which stands in stark contrast to the United States, where at least out the gate, most of the support was primarily to very large companies that had had relationships with very large banks. So in any case, there's a public mandate. Another thing that sets them apart is a regional principle. That is to say that Germany's public savings banks, these financial institutions, are really limited to their region, to their geography. That is to say they aren't able to do business outside of their particular geography. And their geography usually is usually in the form of maybe 2 or 3 counties in the that would be the size of about 2 or 3 counties in the United States. And that matters because at the end of the day, the way in which public savings banks make money and sort of is by providing services. There's a huge incentive on behalf of these institutes to really service their local regions, in part because they are prohibited from essentially competing with other savings banks that might have that might be located in a different geography. A third thing is that they are institutes under public law, which for the most part means that they cannot be sold. They can't be sold or merged into some other private entity or some other entity, such as another private bank. And finally, the fourth thing that sets public savings banks apart is that they are under municipal trusteeship. That means that public stakeholders serve on the supervisory boards of public savings banks. So public savings banks operate under a 2-board system. They have a management board that serves at the leisure of a supervisory board. And that supervisory board, for the most part, includes, among other things, representatives of local governments. It also includes representatives of employees within the public savings banks, interestingly enough, as well as business experts from the region. And so what that supervisory board is really designed to do is make sure that the public savings banks fulfills its public mission. So this just gives you a sense of the size of these institutes. You can sort of see here that these are about, each one of these represents the geographic distance. Here we go. So let me talk a little bit finally about the sort of the puzzle that was at the center of this research. The first is that that public banks and public savings banks have existed actually in most European countries for a very, very long time. But in Germany, public savings banks have become sort of the economic engine that drives Germany, the largest economy of Europe. The second is that public savings banks really defy 2 key narratives of the political economy. The first being that that public savings banks should, in theory, be sort of relics of the past, that they are unable, because they're small public institutes, they really shouldn't be able to compete with the sort of the large private institutes that have economies of scale, that should be operating more efficiently. And the other, of course, is that public banks or public savings banks should be much more prone to corruption, to inefficiencies. They shouldn't be operating especially effectively compared with private entities. And the third puzzle is sort of presented by the Great Recession, and I'll talk a little bit about each of those. So let me just show you, this graph here gives you a little bit of a sense of lending to businesses. This shows you that lending to businesses and self-employed really underscores the importance that public savings banks play in Germany and have played for a long time, over a period of time. What's remarkable about this is that the consistency of lending. This compares public savings banks with other kinds of banks, including cooperatives. This is a graph that depicts the size, the amount of credit that goes to self-employed firms, smaller. These are all basically proxies for small, mid-sized enterprises. And again, it illustrates that Sparkassen and their savings banks play a dominant role in the lending to these institutions. And then the other, this graph here really defies the claims that public savings banks shouldn't really be efficient, that they shouldn't really be profitable. here, both these next two graphs are ways in which you sort of measure profits. This is a profit loss by bank type between 2000 and 2017. And what you really see in this graph is, obviously, after the financial crisis, public savings banks did really, really well. But I think what's important is that if you look over the history of public savings banks, what characterizes them is stability, that they are not institutions that are incredibly volatile. They don't go up and down. Their profit losses are relatively consistent with the exception of the financial crisis. And this period where there's a spike in their profits versus their losses is really a reflection of the fact that in the wake of the financial crisis of 2008, 2007, 2008, and then in Germany and Europe, the 2010 European financial crisis, public savings banks were the institutions that made up for the loss of capital that small and mid-sized enterprises desperately needed. They continue to fulfill that mission. And you really see that here later on. Here's a return on equity, another measure of profitability. And you really sort of see this again. The return on equity is largely consistent over time, and then you sort of see this spike. Whereas the red line here are big private banks. And there, of course, you see huge spikes in profits, but then huge falls in losses. Again, what I think distinguishes public savings banks in Germany from other banks, particularly private banks, is this value and stability in providing a source of credit to small and mid-sized enterprises over a period of time. And that really is their comparative advantage. So what accounts for this? I would say there are three things that account for it. One is economics. Public savings banks are remarkable in part and have been able to provide this sort of source of stability in part because simply they add value. They add value to the small, mid-sized enterprises in those regions. They are very boring institutions. That is their pride. They do lending and they take in deposits. They don't sell their loans. They keep their loans. They not only provide lending, however, they also provide important information. In interviews that I did with a number of small, mid-sized enterprises, as well as banks themselves, they articulated the fact that they don't just provide loans. What they also do is provide important information to small, mid-sized enterprises about customers, about suppliers, about business models, because these are institutions that have experience around the country. They're able to bring a lot of information to bear that's valuable to small, mid-sized enterprises. The second important solution for why it is that they continue to exist is their administration. Public savings banks in Germany, although they're independent entities, are part of a large network of 376 savings banks, as well as a number of state level and other institutions at the federal level. But they are part of a larger network, and they really are a network. That is to say, they're not hierarchical, they don't require participation, but they participate in this larger network. And that gives them a number of advantages. First of all, it allows them to gain a number of economies of scale, for example, with training, with marketing. In addition, they have a deposit insurance scheme in which basically all these institutions share joint liability with each other. That is to say, they all are liable for each other's practices. And so they're able to sort of leverage this large network in a number of important ways that gives the individual savings banks advantages that allow them to continue and thrive. And the final solution to this puzzle is political. I can't emphasize this enough. What savings banks have been able to do, and with something that other savings banks in other countries have been unable to do, is really leverage their size and their breadth in the country to make sure that when legislation arises that might harm them or might weaken them, they are able to sort of fight that either at the European level or at the German level. And they've been effectively able to do that. And so the three things, economic, administrative, and political, I think are the reasons that they're able to survive. And I have some takeaways for other sort of lessons learned, but I'll stop and give people, if they want, a chance to ask some questions. Thank you.
Thank you very much, Dr. Cassell. Yeah, the floor is open if there. Oops. Yeah, I'm sorry. Thank you very much. And I'll go to questions. Richard Robbins, Dr. Robbins, welcome.
Yeah, thank you. Mark, how would you characterize the difference between German saving banks and cooperatives in the United States? That's
Sure.
a question that often comes up.
Yeah. Well, I mean, there's a number of different things. I mean, first of all, the cooperatives are private institutions. I mean, there's lots of cooperatives in Germany. They operate differently, right? They're credit they're owned by their members as opposed to owned by, say, shareholders. But again, they're private entities. They can be sold. They can be merged into some other entities. They also, at least, and they have a very different mission, right? Credit institutions, cooperatives are really there to serve their members, whereas publicly owned institutions or public institutions like Sparkassen are really there to, among other things, serve their region. And that's, I think, a very different purpose. And there's other ways in which they differ as well, at least in Germany. But we could talk about those as well. But those are the main ones, I would say.
Yeah, thank you.
Dr. Howell.
Thanks very much, Mark. My question is a simple one. You showed a map, and you showed the map dividing the country into various areas, but the number of areas weren't that many that I could see in the divisions. And so I was thinking, oh, there's one bank for each of these areas, but then you've talked about lots of banks, many more than that. So what's the relationship between the number of banks in those areas you showed?
You're muted.
Sorry, I'm sorry about that. I think maybe I went over it too quickly. That map that I showed actually had hundreds of little districts in it that were all over the country. I did that in order to sort of demonstrate or show one of the things that's really interesting about the German Sparkassen system is that they're really, as I said, there are hundreds of little districts, and those savings banks are responsible for the economies of each of those districts. What that means is that productivity and the sources of capital are much, much more widely distributed in Germany than they are in most other countries. So if, for example, if you compare Germany to, say, Britain or France, and you look at where productivity happens, it tends to be focused on a couple of big centers of commerce, usually located in the largest cities. What's remarkable about Germany really is the fact that you have these national champions or these national manufacturing champions, other sort of champions in other industries, and they tend to be incredibly distributed across the region. There's not as much of a concentration. You have, some cities are known for shipping, and some cities are known for car manufacturing. Some cities are known for tool and die manufacturing. And I think part of the reason that you have this distribution of productivity has to do with the fact that the savings banks are themselves widely distributed, and that's not by accident. That's not just because they happen to migrate there. They are there by law. They have to be in those places. They can't leave them, and they are also incentivized to make sure that the businesses and individuals in those areas are doing well economically. And so that I think really sets them apart from other countries.
These large corporations presumably are not using the public savings banks, are they? They're using other banks, right?
That's actually most small mid-size. So when I talk about small mid-sized enterprises, I'm talking about enterprises with less than 500 people. Yeah. And they actually do rely on savings banks, and certainly the suppliers do as well, that they build around them. I was struck, for example, in areas of Baden-Württemberg, which is near Stuttgart. In that area, in these relatively rural areas, you have these national champions creating this high value-added manufacturing, and a lot of that stems from the fact that they're able to get credit even in times of cutbacks in credit. So I would say, obviously, the Mercedes of the world and the BMWs of the world these large multinational corporations don't rely on savings banks, but many of their smaller suppliers do, and of which there are many of them in Germany. And I think one of the things that characterizes Germany's economy is this sort of high value added productivity that's done by relatively small to mid-sized enterprises.
Thanks.
Sure.
I'm just going to jump to Greg since he hasn't asked a question yet, and then we'll go to Joseph. Go ahead, Greg.
Hey, Greg.
You're muted, Greg, it looks like.
Okay, sorry
Hey,
about
Greg.
how's it going, Mike? Well done.
Good.
I'm assuming that the banks do not make personal loans, and if not, then at least in the US for a while, there were postal savings banks, anything equivalent to that, either in the past or in the present in Germany.
Sure. I mean, there's been postal banks. Germany has had postal banks also. Postal banks are a little bit different than the public savings banks, at least in Germany. But I think postal banks in the United States could be, at least in part, could mimic what public savings banks do. I think, public savings banks in Germany absolutely make loans. They make lots and lots of loans. But I think, again, what sets them apart isn't just that they make loans. Really, public savings banks, because they're so networked into their community, at least this is what was told to me by many of the businesses that I talked to, is that these savings banks, obviously they make loans, they make them at better rates, in part because of the knowledge that the savings banks have about the enterprises. They have a much greater knowledge about the enterprises, and so they're able to make rates. I mean, many of the same arguments that we hear about community banks or credit unions in the United States, but they do something else, which is that they also are able to sort of take in the larger economy. So they're able to sort of understand the effects that this loan would have or not have, not just to that one business, but to how that one business might play out with other businesses in the community. So this public savings bank can take into account the effects that loan has, not just on that individual small enterprise, but also on that loan and the broader community. And the other thing that I would say is that because they're so networked into the larger economy, again, I get back to this notion of information. Public savings banks really provide businesses with a lot of really important information, not just about the sort of the business model of the company, but also the customer base, the supply networks. Because there's 376 savings banks throughout the country, all of them making loans to small shops, to maybe small manufacturers, to services. They have this enormous knowledge bank that they can offer to a new startup, for example, or an entrepreneur that's sort of thinking about making a loan, that they can offer and do in fact offer to those businesses. So information is a really crucial part of the value added that public savings banks provide.
But they're all business loans. It's not personal for homeowners.
No, they make personal loans too. They
do?
Car loans. Yeah, absolutely.
So it's unlike it's unlike the Bank of North Dakota in that regard.
It's unlike, it's not like, the Bank of North Dakota is really a wholesale bank, right? So the Bank of North Dakota also is similar in the sense that it has a public mission to it, but the Bank of North Dakota doesn't make any sort of individual loans. It mainly provides lending to other institutions that allow it to, that like community banks and other institutions. So it's different in that sense, yes.
Yeah, thanks for that clarification.
Joseph, welcome back. You have to unmute. There you go.
Yeah. Well, Mark, that was a very interesting presentation you made, and I would like to make one remark on one thing, and that is in a way you presented the savings bank, the Sparkassen, as a kind of model, but a model of what? And I think it's a model for a banking, a model of the business, a business model for a bank. The orientation towards the real economy, towards the local or regional real economy, supporting that. That's a very useful and very welcome business model, which makes a big difference when comparing with other larger, very commercially oriented banks. That's okay, and I think that's really a valuable advantage having it. But on the other hand, when considering the monetary system, the functioning of the monetary system, we need to see that the Sparkassen, as well as the cooperative banks and whosoever, is a fully integrated part in the existing bank money regime and part of that fractional reserve banking system. And you didn't refer to those large Giro centrals of the Sparkassen. I do not mean a central bank in the sense of the Federal Reserve, Landesbanken and the Girozentralen.
Right.
So, yeah, and so that means that, to my knowledge, much of it's the same with the cooperative banks, much of the reserves the Sparkassen have is centrally managed by those Giro centrals. And what do they do with a lot of reserves? Because the Sparkassen tend to have a certain excess of reserves, while other banks are in need of reserves. So on the bank money, on the money market, you know. And so one needs to see that as well. I mean, that's not to belittle the merits of Sparkassen, but I think it needs to be seen. And by the way, it's also particularly on the local level. You know, on the local level, there is a community much more than on a bigger level, and that's also how should I say? It's a source of some camaraderie, you know. And so the Sparkassen and similar institutions are an opportunity for party comrades to be provided with a decently paid job and so on. You see, I mean, it needs to be seen, I think, you know.
Yeah, I mean, so I guess it was two. I guess I'll respond in two ways. One, you're absolutely right. The Sparkassen are part of a larger network that includes Giro, which include Landesbanken or state level banks, as well as as you point out, the Girozentrale bank that allows the Sparkassen to sort of put their reserves to work, if you will, in the broader monetary system. So I'm not weighing in on that, but I do think that at least for the individual small savings banks, that's a really important advantage that they're able to leverage, which, say, for example, community banks in the United States or credit unions in the United States may not be able to. And I think it's one of the reasons that that Sparkassen have been able to survive over the many years. And if you know, in the book, I'm not trying to promote the book, but in the book, I do talk a lot about that relationship between the state level banks and the savings banks, and really the state level banks did in fact struggle with some real serious problems, and I think in part of the reason that they struggled with those problems of within the financial crisis is because they emulated private banks. They began to act a lot like Deutsche Bank, Commerzbank, other kinds of private banks, and that really is what got them into trouble. As far as your point about your sort of suggestion that local savings banks are sort of sources of corruption or nepotism or places where people can get jobs, I mean, honestly, like, I'm actually struck by how little corruption there is. I mean, there's sort of this assumption that at these public savings banks, there should be, that they're, that's obviously always the refrain that is given when you sort of talk about public savings banks. Oh, they're going to be sources of corruption, and how can you allow political leaders to have an influence on public savings banks or public banks? That's just going to go south. And what I find remarkable is how little of that happens, that there's actually a fair amount of oversight. And here's the thing, the oversight that occurs isn't by a federal agency, it's within the Sparkassen system itself, because the Sparkassen are all held liable for each other's decisions. So if you're a Sparkasse, say in Büdingen, in a tiny town in Hessen, and you behave badly, you are independent, you can do all kinds of crazy things. But at the end of the day, the neighboring Sparkasse or the Sparkassen in some other city in your state is going to look at your behavior, and it's going to raise flags, because at the end of the day, they're going to be held liable for your decisions. And I think in some ways that kind of an oversight system is a more effective one than, say, having a federal agency who's demanding information and sort of second guessing what that institute is doing or whether or not that institute is behaving badly. And really, the incentive is for that institute not to share any information with the federal regulator. Whereas in the Sparkassen case, they are required as part of the network to share that information. And so I guess I would just say it's not like it doesn't happen, but I'm actually struck by how little, given that you have 376 individual savings banks that are free to basically behave any terrible way they want, how little corruption and nepotism there really exists, I find. And if you look at their administrative costs, that is, if you look at their administrative costs, they're the lowest of all the different the three pillars of Germany's banking systems. I mean, so something is happening. Maybe they're just deferring the corruption, and maybe we just aren't finding it. But I do find it sort of interesting the way in which they try to do oversight. Mm-hmm. But thanks for that point. It's a really good one.
Yeah, it is. We are out of time for this discussion, but I'm really glad Joseph asked that question, because that clearly was something I was looking for. And what I think is novel about the book, and I've suggested maybe doing a book club on this book, even in the Alliance, is these banks precede not the creation of money out of credit. That goes back to double entry bookkeeping in the 1400s, beginning then, but it precedes modern banking as we know it today, in the sense of the Federal Reserve Bank and what we're all talking about here. And the survival of these institutions through this period, in definement, as you said, of the many pressures that are still there. And the book or the article I put in the chat, the title to, and I picked up early on in your book, and then I felt justified in having done so, because this you reference it numerous times, the Shackman and Fallis et al., a case for boring banking and re-intermediation. And I think Sparkassen will survive the next period that Ordonez talked about, and they have 250 years of experience of doing banking in an intermediary kind of way, which is what we want financial institutions to exist to do. And the fact, to what extent are they too creating money out of credit, as Joseph, asked about? They're maybe taking advantage of both sides, because that's the world they live in. But I think we can learn a lot about the real economy, the real role, and, the scholarship and the mindset, the methodology in this book is, I just really want to applaud you for that, Mark. Because,
thank you so much.
Your public policy, your public administration, the values that are guiding your work over time really reflected well here. I know we have to move on. Yes. So thank you for being here.
If this video was helpful, please hit the like button, subscribe for new video notifications. Please consider donating at monetary.org/donate. Don't forget to check us out on Twitter at AMI Monetary or on our website